My name is Jim Baker from Mott Baker Tax Consultants, and I just had an interesting case this week. A non-resident who owned a house in Florida passed away, and if you're not aware of it, there is an estate tax for well, there's an estate tax for everyone, but for non-residents, the exemption is only $60,000. For residents, for you and me and people that live here, residents and citizens of the U.S., the estate tax exemption is $5 million. So you don't have to file, know about, pay anything unless your estate and all your assets are worth over $5 million when you die. But for a non-resident, if you are from Chile or from Brazil and you have a house here and it's worth more than $60,000, and it's not held in any kind of entity or you just own it, there's an estate tax to pay when you die. There should be some planning that goes into this before you before you buy the property and before you die. But regardless, we're going to pretend no planning was done, and I'm just going to go over some basics of the forms that you have to file and how the forms get filed. So the 706 is the estate tax form. This is a 706, United States Generation Skipping Transfer Tax Return, estate tax return. So the 706 is the basic estate tax return for everyone, which for U.S. citizens are the very 1%, over $5 million of estate. There's a lot of subschedules where you list all the details. Real estate, this is the 2032A valuation. Agreements, the valuations. There's just a lot of subschedules. You can see over here that this is a lot of pages of subschedules and information to be provided. So this is the form 706. What we're talking about now is the 706NA. So this is the United States estate tax return of non-resident, not a citizen of the U.S. And this is basically two forms, or two pages. So the 706NA is the form that gets filed, and any support, we'll get to it. Part 3, any support that's required from Part 3, you have to use the forms and the supporting forms from the Form 706. So you have to take the forms from this and put them behind this return. So it's the softwares I've used, like Drake software, doesn't have a 706NA, so you basically have to prepare this and do the tax calculations and go through the instructions outside in this fillable PDF, and you have to pull all the separate schedules. You can do a 706 in your system and pull that and get that and all the details, but then you have to fill this out and put this in front. So you can't e-file this. This has to be paper filed, and that's fine. So we're going to go through the form a little bit. This is the basic information, part 1. The names, birth, date of death, residency, and that's part 1. It's pretty straightforward, and you can always, I would definitely recommend you read the instructions. You can just Google this. I'll put a link in the video with the instructions for Form 706NA, and it goes over the whole form. It's very complicated, but I'm just going to go over the basics. The tax computation happens last, so we're going to skip tax computation. Pay prepare information goes here. So here's the general information, part 3. Questions. Did the decedent die testate? Did he have no will? So basically you have to answer these questions and do what it says. So see the instructions, Schedule G, if that's yes. If yes, attach Schedule G, and that would be from Form 706. Same here, Schedule G. This would, if yes, attach Schedule E, Form 706. So based on your responses to these answers, you have to attach form from the actual 706. So these are, did the decedent at the time of death own any real property located in the United States, stock, obligations? So if you don't own or know the answers, you'll have to ask the executor. But that's fine. Okay, so these are the questions. Now you get down to the gross estate in the United States, and you're supposed to list the entire estate here and only put the valuation at the date of death in U.S. dollars. You should read the instructions, but basically you list the properties here, and this is where the calculation happens. So gross estate in the United States, someone owns a house worth $300,000. Gross estate outside the United States, they own a house outside the U.S. too, so that's $200,000. Missed a zero. The entire gross estate, $500,000. Expenses, and you can look into this more, but this is basically anything that the estate has to pay. mortgages, expenses, other debts, medical expenses, and we're going to give this a 100,000 of expenses, which is a lot. So now this is the actual deduction. The way it's a non-resident form works is you divide line 1 by line 3. So it's basically the, let's point at it, the U.S. estate divided by the total estate. The U.S. estate divided by the total estate, so I paused that. 3/5, 60%, 60% of 100,000, 60,000. Okay, so charitable contribution deduction, so you have to check the rules. We have none in this hypothetical example. State tax deduction, is that, did they pay state taxes? Maybe I can make this a little easier for us. Zoom it in. State tax deduction, I'm zooming in again, is, let's say they lived in Florida where I'm at, where there's no estate tax. That's great. So 0, total deductions, 60, 1, 2, 3. And the taxable estate is 240, 1, 2, 3, because it's 300 minus 60. So then you go back up here and you put in your 240, 1, 2, 3. Taxable gifts located in the U.S., transferred but not included. So these are gifts that happened that the decedent, the person who died, may have paid taxes on, but it didn't include in the estate. For this, we're putting 0, 1 and 2, 240, 1, 2, 3, tentative tax. So the tax is calculated using 706, Form 706 instructions, and it would be Chart A. Here it is, the Table A, the Unified Rate Schedule. So I'm going to just not do any thinking. You basically 100 minus 1. You know how a tax table works. The tax, the 240,000. So we'll get 38,000, and then 240 minus 150 times 32. So we're not going to do, you know, we'll actually do it right. Let me pause this real quick. So I did the math. Tentative tax on line 3 would be 67,600. Unfortunately, that's kind of a lot. Gross estate tax, 67,600. You can see it on line 5. They calculate tax on line 2, and then you kind of net it, because you already paid estate taxes on this amount. Supposedly, that's why you put it there. The unified credit is 13,000 for most non-residents. If you were a resident for a portion, we'll get over that. So for most non-residents, 13,000, which it kind of is, the 60,000 is the exemption amount. So this is kind of 60,000 using Table A. This is the amount of credit you'll get for 60,000 of exemption. But that's the number you put here. So the balance, because I don't want to get it wrong in front of you, 54,600. 54,600 of tax. Any other credits? You have to see the instructions. Credit on prior transfer taxes. Net estate tax, 11 from 8. So we have 54,600. Total transfer tax, 54,600. And that's basically it. Again, you're going to have to read through the instructions and see the additional details. Some points that you should really, let me pause this for a second. So I just want to write some final points. I have this up here. I'll make this 18. So exemption for NR is 60,000. There are many documents from a state that need to be attached. For you visual people, I'm typing this. The return needs to be filed by 9 months after the date of death. Extension can be requested. Another point would be residency and history of prior residency is very important and affects the tax. So basically, I write that because if the person was a citizen, was a resident, and got rid of their residency and left within a 10-year period, the rules are significantly different. Sometimes it can benefit, sometimes it can hurt, but you have to see the rules and apply it to your situation. So if the person is getting brought back in as a citizen, that might help because they might not have an estate that's greater than $5 million. So that's why that would matter. And like the rules and the timing and where you go matters. And the last point, there are there are tax treaties with certain countries as it pertains to estate taxes. So I hope this is helpful, and now you know that Form 706 NA is for non-residents, and all the forms that go behind the 706 NA are the actual 706 forms, and there's a bunch of them, and they're really lumpy. So yeah, I hope that's helpful. If you have any comments, please leave them in the boxes below, and I'll try and get back to you. If you have questions or you need us to help you in the state tax return, support@mbtaxconsultants.com. You can send us an email, or mbtaxconsultants.com, MB Mata and Baker. So yeah, let us know. I hope you enjoyed the video. Thanks.